Welcome to this Power Options presentation, a look at some of the fundamental criteria that you can screen for in the various strategies using our patented search tools. The patented search tools on Power Options allow you, in any of the 23 strategies we support, to filter by option criteria, looking for the returns, delta, implied volatilities, probability, and much more. At the same time, you can screen for various stock fundamentals, limiting the stock price, earnings per share growth, and more. Of course, you can also screen by various technicals, average stock volume, historical volatility, simple moving averages, MACD, Bollinger Bands, and more. Here are all of the stock fundamentals that we have on Power Options under the Fundamentals tab. We can restrict stock price, look for specifically a stock or percentage stock change today. You just wanted to see stocks that were moving up by price or by percentage. The earnings per share growth, percent EPSG. Price to earnings, PEG ratio, price earnings to growth. Shares outstanding. Percent dividend yield, if you're looking for dividend paying stocks in covered calls, married puts maybe, or standard collars. Market cap, net tangible assets, market cap ratio. Price to book, price to sales, and then the bankruptcy indicators, Z-score, Z-prime, and Springgate. You can also screen specifically for a symbol or remove a specific symbol from your results in the fundamentals field, and screen, of course, for earnings between now and expiration, not between now and expiration, between now and a certain time frame from now, and same with an ex-dividend date as well. This is pretty much the same thing that you'll see in every one of the 23 strategies, the available fundamentals to screen for. We have covered many of these before. Earnings and ex-dividend date, they're pretty straightforward. Why you would screen for earnings, why you wouldn't screen for earnings, depending on your strategy. Recently, we had a webinar where we talked about top fundamental criteria. You can see the YouTube link there. The full discussion on the top fundamental criteria we might use goes from about the 17-minute and 30-second mark of that video to about 26 minutes. There's also a recent webinar on using those bankruptcy indicators, Z-score, Z-prime, and Springgate. It's just under 9 minutes long. Now you can come back to the screen later and write down the links if you want to, or you can just go to the Power Options YouTube page and search for terms such as fundamental criteria, or bankruptcy indicators to find the video that you want. Of course, you can scroll through all the videos we have on our webinars page, powerop.com/webinars.asp. But the specific question came in, can you review price to earnings, price to book, and price to sales? 3 of the many criteria that we have available under the fundamentals section as well. This box here we'll come back to in a little bit, where you see it showing us the average, min, and max of the various stock and option criteria as well. That's from the optionable stock statistics page. A Power Options member, you can click on Learning Center underneath the Home tab, click on Market Activity from the Learning Center menu, and then from the Market Activity menu, click on Optionable Stock Statistics. And once we have our discussion on these 3 indicators, we'll come back and discuss a little bit more of what these averages, mins, and maxes mean for those particular indicators. Now let's jump right in. We'll start with the PE ratio, price to earnings, the underlying stock price divided by the earnings. Every filter in the Power Options search screen has a pop-up definition if you just hover over the link. Here for price to earnings, we see this value is the price to earnings ratio calculated by dividing the underlying price by last year's earnings. A higher PE value means you're paying more for each dollar of earnings when you invest in the underlying. In other words, a company with a high price to earnings ratio, we're paying more, higher price for the stock, where lower PE means we're getting more earnings per the investment dollar. General rule is that PEs below 15 are considered undervalued, and above 18, a stock might be considered overvalued. General range of PEs that we use in some of our default searches are 0 to 50 to 0 to 70. The price to book ratio. Again, the pop-up definition is the underlying's current market price compared to its most recent quarterly book value. Some investors feel that a low price to book value may mean the underlying is undervalued and a good buying opportunity. But you always want to compare the price to book ratio of a stock you're researching, if you feel it is low and you're looking for undervalued, to other price to book ratios in the same industry where it's compared to its competitors. In general, of course, a price to book ratio less than 1 implies that the company is undervalued. Many investors may consider using a value of less than 3. So what does it really mean? Well, assume you want to invest in a company that has a book value of $2 billion. Company has 100 million outstanding shares, so the book value would be equal to 20. Now, if the stock's trading at $25, the P to B ratio would be about 0.8, 20 divided by 25, making it look like an undervalued stock. But there are caveats in addition to comparing it to its other competitors. There's something called a value trap. A company is low priced with a low price to book, but lacks characteristics for capital appreciation. Doesn't have good prospects for positive earnings or positive growth, might not be as good a value as you expect. A stock buyback can cause the price to book ratio to be off temporarily, as it's not a regular occurrence. Now, a price to book ratio greater than 1 doesn't mean the company isn't a good buy or is necessarily overvalued. That's why we said that many investors might like to use a ratio of less than 3. At a negative price to book, you can have a negative book value, which gives you a negative price to book ratio. Does not mean the company is more undervalued. This could happen because the company wrote off a large amount of assets or goodwill, and a resulting loss wiped out the book value, or it could mean that the total losses on the company so far is more than its equity. But again, always want to compare it to other competitors in the same industry or same sector. Price to sales ratio. Now, this is simply calculated with the last closing price of the stock divided by the last 12 months sales per share. This, again, is used as more of an indicator of a company's growth, not necessarily undervalued, but a ratio below 1.5 might be considered a good value. But just as before with the price to book, we want to compare the price to sales ratio to those in the industry as well. General thoughts seem to be that from an investment perspective, a low price to sales, less than 1, may indicate a good buy, with a stock price that is considered to be low value or undervalued. Higher price to sales, those such as 2 or 3, kind of display a strong market price and perhaps an equally strong company. Now, depending on the goal of the investor, the option strategy that you're using, you may want to seek a low price to sale ratios to cover good stock buys. But many other investors might be comfortable owning shares in only the strongest companies and may have a ratio higher at the 2 to 3 range. Now let's look at those stock statistics again. In general, we said a PE looking for an undervalued stock might be a PE ratio of less than 15, overvalued greater than 18. Here we see that the average price to earnings across all optionable stocks in the market is 23.2. So the average is considered overvalued right now, March 10th, 2021. Now, the price to book ratio, we talked about undervalued might be considered to be less than 1. Many will use less than 3, but you still want to be aware of the caveats. And again, we see here that the average price to book ratio is 3.9. Now, price to sales looks a little bit more clear. We consider undervalued to be less than 1.5, and we saw that some others say less than 1. But the average price to sales right now is 13.2. Right? But again, we want to use those other ratios, compare it to the competitors if we're using this to gauge if it's undervalued. The whole sector might seem undervalued, or the whole sector might seem overvalued as well. How do we take advantage of this? Well, we'll just create a search on PowerOptions. Let's say we wanted to use these 3 metrics to hunt for undervalued or quote-unquote good value stocks. We'd select the strategy that you're interested in. When you go into the search, scroll under the listed trades, hit clear the filters to empty everything out of the stock and option technicals and fundamentals. Select your expiration time frame and what basic option criteria you'd want: return, probability, delta, price, and more. Enter in your fundamentals. Look for a PE, let's say, of less than 15. A price to book of less than 1, or maybe less than 3. For our example, we use less than 1. And a price to sales of less than 1.5. You also want to use the Add Remove Columns button on the search to add these 3 columns in so you can use them as comparisons. Now let's just use a simple covered call search. We'll just go out to standard April expiration. We'll look just one strike in the money. We're going to use no other stock filters except for the 3 that we just mentioned, and we're going to sort price to earnings from lowest to highest. Here's the top 15 of our 494 total results and match this criteria. Well, since this is a covered call, we probably want to look for some other criteria as well. Let's add some more in. Let's increase the filters for bullish stocks. Let's look for an earnings per share growth of greater than 5% in addition to the PE ratio. Let's look for positive earnings growth. Let's put in an average stock volume of greater than 750,000 shares per day and use a simple SMA. We're just going to look for stocks that are trading above their 50-day moving average. This takes us down to 50 results. We see some interesting ones in there. Boston Scientific, Berkshire Hathaway. But does it really work? Does it really enhance performance? Well, let's keep that same covered call screen where we're just looking at the stock criteria. We're just going to look one strike in the money, but let's change the expiration to be 1 year out in time. And just look at the stocks again, and let's take the last bullish year of 2019. Let's run a search at the beginning of January 2019 in the covered call screen for Leap Options and see what happened to the stocks that met the criteria over that 1 year time frame. Well, on January 2nd, 2019, there were only 4 results that matched our PE, PS, and PB ratios. Yamana Gold, Potato Holdings, Sealed Air Group, and Kinross Gold. And as you see below, when we hit Calculate Group Results from the historical search, which found the positions that matched our criteria, it did pretty well. 3 out of the 4 trades were successful from January 2nd, 2019 to December 31st, 2019. AUY was up 65%. It moved from 240 to 395. BITA is the downer. It's down about 29% from 2079 to 1484. Sealed Air Corp went up 451 or 12.7%, pretty decent move. And KGC is up again 46.3%, Kinross Gold, but it moved from 324 up to 474. So percentage-wise, it's pretty good gains. But as you can see, the monetary gains, if we just did 100 shares of each, the gains on SEE and KGC, about $6 or so, 601, are countered by the loss on BITA. So really only about $1.55 or $155 up, assuming we just bought 100 shares of each. Well, it'll be a little bit more than that, but as a comparison, you see where we are. But 75% success rate, 3 out of 4 of the stocks went up as we expected. Did see a reasonable loss in BITA. Let's take that same time frame, but let's use another search criteria. Let's grab the default at-the-money initial values covered call screen that's shown on PowerOptions and change the expiration date as well to 1 year out in time. The stock criteria used on this particular screen is a broker recommendation of less than 2.6, only looking for stocks that are recommended as a buy, strong buy recommendation. Stock has to be trading above its 50-day moving average, limiting the price to be between $9 and $100. Earnings per share growth greater than 7%. PE of 0 to 70, and a price to sales of less than 10. Now, over the course of that 1 year time frame from January 2nd, 2019 to the end date on December 31st, 2019, 9 out of the 15 stocks moved up in price, about a 60% success rate. And there are some big losses in this one. Cooper Tire only lost about $3, about 10% from its original price at $31.95. It lost $17 on Spirit. That's one of the big downers. And B&G Foods had a big drop of about 12 points from $29.21 to $17.93. Corcept Therapeutics lost about $1 as well. So, just the stocks themselves, this one didn't look as successful. We do see some big gains here. Marvel Tech from 1650 up to 2656. PayPal Holdings, second from the bottom, 85.75 up to 108.17. And some modest gains as well. Berry Plastics just from 46.75 to 47.49. But in any case, just a rough comparison. Would adding in these undervalued positions save us from a bear market such as we saw in 2018? Well, let's run that same historical test again. Same settings for both. We're going to look at our PXs search, the price to earnings, price to sales, price to book. The ATM initial values covered call screen, of course, looking 1 year out in time as well. Using our PX fundamentals, run the search on January 2nd, 2018, and we have 14 results. Deutsche Bank, Energy Transfer Partners, Noble Drilling, Transocean, Office Depot's in there, Southwestern Energy, Michaels Companies, and more. Going forward to December 31st, 2018, only 3 of the 14 results were successful for about a 21% success rate. Energy Transfer Partners, 1860 to 2147. I'm only highlighting the winners here because there's only 3. Ascena, 237 to 251. Okay, that's maybe more of a neutral move. And a big move in HCA, 89.51 up to 124.45 in that bearish market. We see some positions. Prudential, 30-point loss from 115 down to 81. A couple positions in here had almost a 50% loss. Chesapeake Energy from 410 down to 210. And Deutsche Bank from 1933 down to 815. Well, was the default at the money covered call screen looking for those 1 year out leaps better? Well, the criteria that matched here, we've got some big names: Sienna, eBay, Fiat, Molson, Goodyear, Altria. There's Sealed Air again, Finisar. HCA is in this one too, as well as the Michaels Company from our previous searches. And of the results on this one, it's pretty much about the same. 3 out of the top 15 were successful, or about 20%. Finisar was positive. It moved from 21.19 up to 21.60, but that's more of a wash, so I didn't highlight it. HD Supply only lost $2. Fiat lost $4, but that's a significant portion on an $18 stock. Down at the bottom, Carrizo Oil and Gas and Haynes Brands essentially dropped close to 50%. Carrizo from 23.02 down to 11.29, and Haynes from 21.30 down to 12.53. Not quite 50%, but some reasonable moves downwards as well. So we see about the same success rate. It didn't really enhance our search. But this, again, is just a small window looking at 2 years over the course of 1 year, not looking at what the positives were during the bullish times and where the full negatives were when the market was at the bottom. Pretty close, though, right around 1226 of 2018 when the market hit the bottom. All right, so that is our brief discussion for the PX's fundamentals. PE, price to earnings. Usually a search of less than 15 on the screen will be considered undervalued. Overvalued is considered greater than 18. Sometimes there's not a lot of problems with trading an overvalued stock. You'll see in our defaults that a PE ratio it might have for some of the covered call screens or other bullish strategies might be 0 to 50 or 0 to 70. Price to book, yeah, undervalued would be less than 1. Many may consider using a value of less than 3. Price to book ratio of 2 or 3 might point towards a strong performing security. In that case, not necessarily meaning that it's overvalued. And price to sales, undervalued less than 1.5 is what we typically look for in power options. Some investors like to use less than 1. Now, again, both the price to book and the price to sales, remember, you should compare that number that you're seeing to competitors in the industry, as that whole industry or that whole sector might be considered undervalued or overvalued as well. Comparing it to the competitors gives you a better eye of where your position might actually stand as well. And remember, if you want to test a strategy or criteria set, you can subscribe or upgrade to the historical service in Power Options, which will allow you to create your search and run the historical tests as we've shown, even if you're doing weeklies, if you're doing monthlies, you try to look for a 1 year out stock comparison as we just did. You can do that all with the historical tools. We also offer a strategy testing service and optimization service for you, where we do the work for you. You tell us what you're looking for, what strategy, what criteria you want to test, a time frame, and we'll run this test for you, supporting many strategies: covered calls, naked puts, bear and bull put credit spreads, buying calls, buying puts, and even just looking at stocks. But we have other ways that we can look at other strategies also. So you can take a look at that there on the Power Store, the store on Power Options. Just look for strategy testing and optimization, and you'll see the two services. I hope this gave you some insight into the PX ratios we were talking about: price to book, price to sales, and price to earnings, how you might consider using them, how to enter the filters into Power Options as well. And we'll see you next time.